Utah has quickly transformed from a quiet, affordable state to one of the hottest housing markets in the country. Over the past few years, home prices in Utah have surged at record-breaking levels, leaving many families unable to keep up. What was once considered a state with affordable living is now feeling the weight of rapid population growth, outside investment, and limited housing supply. For families who grew up in Utah or hope to move there for a better life, the dream of homeownership is slipping further out of reach. One of the main drivers of skyrocketing prices is the sheer demand for homes. Utah's population has been growing at one of the fastest rates in the U.S., fueled by both high birth rates and a wave of people moving in from other states, especially California. With more people coming in and too few homes being built, bidding wars have become the new normal. Buyers are often forced to offer far above asking price, waive inspections, and settle for smaller properties. At the same time, wages in Utah have not kept pace with housing inflation. Families earning middle-class incomes are finding that even modest homes are out of reach. The median home price in areas like Salt Lake County has nearly doubled in the past decade, while incomes have increased only slightly. This gap is forcing many families into the rental market, where rents are also climbing to record highs. For those who rent, saving for a down payment is nearly impossible. Another factor is outside investors. Hedge funds and corporate landlords have been buying up properties across Utah, turning single-family homes into long-term rental investments. This takes houses off the market for ordinary buyers and drives prices even higher. First-time buyers, in particular, are being squeezed out, forced to compete against cash offers from large investors. For families, the pressure is overwhelming. Young couples hoping to settle down, families looking for more space, and retirees seeking a stable home are all being priced out. Many are leaving Utah altogether, searching for more affordable states. Unless serious action is taken to increase housing supply and regulate investor activity, Utah may face a long-term affordability crisis. The promise of Utah as a place for family life and opportunity is now at risk, and for many residents, the dream is turning into a nightmare. Salt Lake City, once praised for its balance of affordability and quality of life, is now facing one of the most severe housing crises in the nation. What used to be a city where middle-class families could reasonably buy a home has become a place where prices are skyrocketing beyond reach. Over the past decade, housing costs in Salt Lake City have risen by over 70%, leaving residents scrambling for answers. The core issue is supply versus demand. Salt Lake City has seen a population boom, with new residents pouring in from states like California, Texas, and Colorado. These newcomers, often armed with higher incomes or cash from selling property in more expensive markets, can outbid local buyers with ease. This influx has driven bidding wars that leave lifelong Utahns unable to compete. Homes are selling in days, sometimes hours, often at tens of thousands above asking price. The rental market has also been caught in this storm. As homeownership becomes harder, more people turn to renting. But landlords, seeing the rising demand, are increasing rents to record levels. Apartments that once cost $900 a month are now going for $1,500 or more, with little sign of slowing down. For young professionals, college graduates, and working-class families, even renting in Salt Lake City is becoming a financial burden. Local businesses and communities are feeling the strain as well. Teachers, healthcare workers, and service employees, the backbone of the city, are finding it nearly impossible to live near their workplaces. Many are forced to commute long distances, adding stress and transportation costs on top of already rising living expenses. This is creating a ripple effect that threatens the city's overall stability. Meanwhile, construction has not been able to keep pace. Strict zoning laws, limited land availability, and rising construction costs have slowed down new developments. Even when new housing projects are approved, they often target luxury buyers or high-income renters rather than the middle-class families most in need. As a result, Salt Lake City faces a future where only the wealthy can afford to live comfortably, while everyone else is pushed further out into surrounding areas. Without immediate solutions, such as affordable housing initiatives, incentives for first-time buyers, and stronger regulation against corporate investors, the housing crisis will only deepen. For many Utahns, Salt Lake City no longer feels like home. Instead, it's becoming a battleground where the dream of affordable living is slipping further and further away. Utah's rental market has reached a tipping point, leaving thousands of families and young professionals struggling to make ends meet. For years, the state was considered an affordable option compared to places like California or New York. But now, Utah renters are paying some of the fastest-growing rents in the entire country, with Salt Lake City leading the surge. The average rent for a two-bedroom apartment in Salt Lake City has nearly doubled in less than a decade. Apartments that were once affordable at around $900 to $1,000 a month are now well over $1,600 to $1,800, depending on the neighborhood. This sharp increase is not just hitting the city. Smaller towns like Ogden, Provo, and Logan are also seeing spikes as more people move in and demand grows. One of the biggest drivers of this rental crisis is Utah's rapid population growth. Over the past decade, the state has consistently ranked as one of the fastest growing in the nation. While this growth brings opportunity and economic expansion, it also puts immense pressure on housing. With not enough new units being built, renters are left with fewer options and higher competition. Another factor is the rise of corporate landlords and investment firms. Many properties that used to be owned by small, local landlords have been purchased by large companies. These firms raise rents aggressively, knowing tenants have little choice but to pay. They often renovate units just enough to justify higher prices, but affordability disappears in the process. Wages, however, have not kept pace with these rising rents. Even though Utah has a strong job market, the median household income cannot keep up with the housing boom. Many renters now spend more than 40% to 50% of their income on rent, far above the recommended 30% threshold for financial stability. This leaves little room for savings, healthcare, or other essentials. The crisis is especially hard on younger generations. College graduates burdened with student loans find themselves unable to afford apartments without roommates. Families hoping to save for a down payment are stuck in a cycle of renting, with costs so high they can't put money aside for a home. If rent prices continue on this trajectory, Utah risks pushing out the very people who keep its economy thriving. Service workers, teachers, healthcare professionals, and young families may have no choice but to leave in search of cheaper states. Without intervention, the rental market in Utah could spiral into a long-term affordability disaster. Utah's housing market has seen one of the sharpest booms in the United States, but this growth comes at a steep cost for those trying to buy their very first home. What was once considered one of the most family-friendly and affordable states is quickly turning into a market dominated by investors, cash buyers, and escalating prices that ordinary residents simply can't match. Over the last few years, home values across Utah have surged to record highs. Cities like Salt Lake City, Provo, and St. George have become hotspots, with home prices skyrocketing by more than 40% in just a few short years. A modest single-family home that may have been around $250,000 a decade ago is now closer to $500,000 or more, making the dream of homeownership nearly impossible for many young buyers. One of the primary drivers behind this surge is Utah's population growth. The state continues to attract people from all over the country, particularly from California, Texas, and other high-cost states. Many of these newcomers arrive with higher incomes or the ability to pay in cash, pushing local buyers, especially first-timers, out of bidding wars. At the same time, limited housing supply has only made the problem worse. Developers cannot build homes fast enough to keep up with demand, and zoning restrictions in certain areas prevent new construction. With fewer houses available, competition intensifies and prices soar even higher. Interest rates have also complicated the picture. During the pandemic-era housing rush, low mortgage rates allowed more people to borrow, which added fuel to the fire. Now, even though interest rates have risen, home prices haven't dropped enough to balance affordability. Instead, first-time buyers are trapped, unable to qualify for large enough loans and unable to save because of rising rents. For many Utah residents, the choice now comes down to two difficult paths: rent indefinitely while trying to save in a market that keeps outpacing them, or move farther away from urban centers in search of cheaper housing. Some families are even leaving Utah entirely, saying the housing boom has locked them out permanently. Unless there's significant change in housing policy, increased supply, or financial relief for first-time buyers, Utah risks becoming a state where only wealthy newcomers and investors can own property. The promise of affordable, family-centered living may fade, leaving future generations priced out of the very communities they grew up in. For decades, Utah's suburbs were considered the ideal escape: quiet neighborhoods, safe streets, larger homes, and plenty of space for growing families. Places like Sandy, West Jordan, Lehi, and Harriman used to offer affordable alternatives to Salt Lake City, making them popular choices for parents looking to raise children without the costs of big city living. But now, those very suburbs are experiencing their own affordability crisis, leaving many families questioning whether they can stay in Utah at all. Over the last 5 years, suburban housing prices in Utah have surged at an alarming pace. Lehi, once a small town between Salt Lake City and Provo, has transformed into a tech hub known as Silicon Slopes. With major companies setting up offices there, the demand for housing skyrocketed. Homes that were once priced at $200,000 to $300,000 are now regularly selling for $600,000 and beyond. The same story plays out in cities like Harriman and South Jordan, where rapid development has drawn new residents, but the cost of living has outpaced local wages. Utah has one of the youngest populations in the country, with many families trying to settle into suburban neighborhoods, yet rising mortgage rates and higher down payment requirements have pushed these areas out of reach. Even renting in the suburbs is no longer affordable. Families who once thought renting was a short-term solution until buying a home are now facing rent increases of 20 to 30% year over year. For a typical family, this means hundreds of extra dollars in monthly expenses, straining already tight budgets. A major reason behind this surge is Utah's population boom. The state has one of the fastest-growing populations in the U.S., fueled by both high birth rates and migration from other states. With more people competing for the same limited number of homes, the result is predictable. Prices keep climbing. The ripple effects are being felt everywhere. Schools are overcrowded, infrastructure is under pressure, and families who once considered Utah's suburbs a safe financial bet are now wondering if they'll ever be able to own a home. Some are being forced to move farther and farther out, to rural towns hours away from Salt Lake City, just to find something remotely affordable. Utah's suburban dream, once defined by affordability and space, is slipping away. If housing supply doesn't catch up with demand soon, the very families that built these communities may be the ones forced to leave.